Welcome YouTube family. Welcome to another video of the Kevin Strong Show. And in this video, we're going to talk about 10 tips that could potentially help you prevent foreclosure. Yes, I'm smiling because Wednesday I got my teeth cleaned. I got to get my money's worth. I'm kidding. But if you're laughing right now, help a brother out. Hit that button, subscribe, like, comment, and share because I care. So without further ado, we're going to jump into this. These are 10 tips that can potentially help you prevent foreclosure of your home. And if you stick around to the end of this video, we're going to talk about states that take a longer time to foreclose in terms of how long it takes the lender to actually take back your property, and other states where they kind of move kind of quickly. So you really need to be on top of your game to prevent foreclosure. So without further ado, let's jump into the news. So as promised, this is top 10 or tips basically to avoid foreclosure. Just for disclosure purposes, I'm not a licensed attorney. I do have experience with this on a personal level. This happened to me, I think, in 2005 because I avoided some of the tips that we're going to discuss today. So once again, hopefully that does not happen to you. So for those of you out there who do not know what a foreclosure is, if you fail to make your home mortgage payments, foreclosure may occur. Foreclosure is the legal means that your lender can use to repossess, take over your home. When this happens, you must move out of your home. If your property is worth less the total amount you owe on your mortgage loan, a deficiency judgment could be pursued. This is very rare. There's been some laws that's passed. Caveat, please, know your own state laws. But generally speaking, it's rare to have a situation where the lender takes back the mortgage, or the home, I should say, not the mortgage. They take back the home because of default on the mortgage and sell it on the open market, and it doesn't cover the cost. And as a result of that, they pursue you for the difference because there's a deficit, hence deficiency judgment. Those are few and far between, but just to be sure, make sure you understand your state and local laws as they apply. So now we're going to start with these tips. Let's start off with number one: don't ignore the problem. This is a very difficult situation. It's kind of like out of sight, out of mind. Like I said, speaking from a personal standpoint, back in 2005, that happened to me. You get into a situation where you go, it's almost like the 7 stages of grieving or something. When you deal with like a death, from anger to acceptance, all of these emotions you're going through. And a lot of times you're getting letters from the lenders, or the lenders trying to reach out to you. It could be somebody from their loss mitigation department, which basically means that's the department that tries to figure out a way to help you save your home. Contrary to popular belief, the banks traditionally don't want your home. They just want to convert it from a non-performing asset to a performing asset. But the psychology from a homeowner's perspective, that if you're behind on your mortgage payment, you get paralyzed emotionally. You just hope that the problem will solve itself, or just by not dealing with it, you don't have to deal with it. So this is what this first point is about. Don't ignore the problem. The further behind you become, the harder it will be to reinstate your loan, and the more likely that you will lose your home. This is absolutely true because each month, as you may or may not be aware of, that you go without paying your mortgage, that's actually taking equity out of your property. And you could put yourself in a situation that after 6 months or 12 months where you had some equity, that equity could have been taken away because you haven't been making your payments, especially if you entered the home with a low down payment loan program. VA loans are traditionally no money down. FHA, which currently in our current market environment has probably one of the highest delinquency rates of any mortgage in the nation. I don't know the numbers off the top of my head, but I'm pretty confident that saying that percentage is over 10%. And those folks typically put down 3.5%. And historically speaking, those folks also don't have a lot of reserves, because if you had ample reserves, chances are you would be putting more down than 3.5%. Contact your lender as soon as you realize that you have a problem, which kind of parlays basically into the first point about don't ignore it. Lenders do not want your house. That's what I said earlier. They just want it to become a performing asset. Open and respond to all mail from your lender. Once again, you have to communicate with your lender. This is paramount. I know it is very uncomfortable. This is something that we do as a company. I'll get into that later. That's really not the main purpose of this video. But you want to open your mail. The first notices you will receive will be good information about foreclosure prevention options that can help you weather problems. Later mail may include important notices of pending legal action. Your failure to open the mail will not be an excuse in foreclosure court. Please understand that by you not acknowledging the call mail that's being sent to you to include sometimes certified return receipt, it still does not preclude the lender from moving forward to repossess your home. Know your mortgage rights. That's important too. Find your loan documents and read them so you know what your lender may do if you can't make your payment. Learn about the foreclosure laws and timeframes in your state, as every state is different. And that could be your diamond in the rough in terms of putting you at the negotiation table or putting you in a position of strength to negotiate new terms and conditions with your lender. But if you want to find out about that, as promised, stick around to the end of the video. Okay, 5, understand foreclosure prevention options. There's information. I'll drop this link to this article in the description below. So if you want to follow up on that, you can. Contact a HUD-approved housing counselors. I have mixed feelings about this. So in full disclosure, obviously, I have a full loan modification service within Strong Jacobs and Associates. So I am a little bit biased to this. To me, it seems as though the people that work for these type of entities don't really aggressively go after and stay on top of the loan and try to get you the best deal that they can. A lot of these HUD-approved housing counselors are nonprofit, which means they don't charge anything. But as the old saying goes, sometimes you do get what you pay for. Prioritizing your spending. Once again, I know this kind of sounds like a broken record, but a lot of times people don't have a budget, or because of a unexpected financial emergency, loss of income, that normally tailspins into foreclosure. Contrary to popular belief, I think the main reason why people actually get forced into bankruptcy is medical bills. It's not from not paying your unsecured bills. When I say unsecured bills, like credit cards and things like that, some people associate with bankruptcy with irresponsible spending, which is a part of the bankruptcy. But the main reason why a lot of folks fall into bankruptcy is basically inadequate health care. And as a result of that, medical bills kind of force them down that bankruptcy road. Use your assets. Do you have access? A second car, jewelry, life insurance policy. Sometimes you can tap into a 401k, or for those of you who are state or city government workers, first responders, teachers, things like that, they have something called 457. Those plans typically will allow you to take money out of that to reinstate your loan to prevent foreclosure. Once again, you have to talk to your plan administrator to make sure that you're eligible for an emergency withdrawal from that account. Number 9, avoid foreclosure prevention companies. Now, this is but I'm going to give you a good reason why you might want to show your brother some love besides being in business for 15 years. You don't need to pay fees for foreclosure prevention help. Use that money to pay the mortgage instead. That is a valid point. Many for-profit companies will contact you promising to negotiate with your lender. While these may be legitimate businesses, they will charge you a hefty fee, often 2 or 3 months mortgage payment. Okay, so I don't disclose service agreements and compensation, obviously, on a platform like this. But I can tell you, there's one thing that makes my company unique. It's definitely significantly cheaper than the average mortgage payment in the United States. Secondly, something else that we do from a loan modification standpoint is that we go to work and start negotiating with lenders without a dime. So how are we able to do that? I do a full deep dive financial analysis of what your situation is, how did you get into foreclosure, what your options are, and then I'm going to make an educated or professional opinion based on the likelihood if I can help you. Just like if you went in to see an attorney, he or she's going to take a full assessment of your case, and sometimes they'll take it on contingency. That's basically how I operate. So I don't charge any money up front. I start to negotiate on your behalf, and then my company's only compensated if you get a loan modification and we can save your home. If we can't save your home, then you don't pay us anything. That's called a performance-driven retainer. So you only pay when you get the service that you desire. That prevents somebody from asking you for $2,000, $3,000, $4,000 and then not delivering on their promise. And once again, for full disclosures, our fees aren't even remotely close to the examples that I just gave you. Number 10, don't lose your home to foreclosure recovery scams. If any firm claims they can stop your foreclosure immediately if you sign a document appointing them to act on your behalf, you may well be signing over the title to your property and becoming a renter in your own home. Never sign a legal document without reading and understanding all the terms and getting professional advice from an attorney. This is spot on good advice. Don't fall for anybody that's asking you to do a quick claim deed. I always mispronounce that. Just immediately assigning your equitable rights over to the property. A lot of investors or unscrupulous investors will try to get, stressful homeowners or homeowners that are under distress to do things like that. It's unethical and it's illegal. It's just bad business. So I want to end this video with giving you some information that I said you could use to your benefit. It's a nugget that could put you in a position of strength when you negotiate with your lender if you find yourself possibly facing foreclosure. So I'm going to have to pull up another screen to go over that. And let me stop the share here. Let me smile again because I got my teeth clean. Okay, there we go. Okay. Okay. All right. So this is from Adam Data Solutions. These are about 2, 4, 6, 8, 10. These are the top 10 based on 2019. These are the states that it takes the longest period of time from the time you go into default until the time the bank actually takes possession of your property. And as you can see by the top 3, 1,600, 1,600, 1,500, Indiana, Hawaii, Nevada, a little bit down the list, the state where I reside in, Washington, 1,000. But getting back to these top 3, everybody knows there's 365 days in a year, right? So the average, there's exceptions, is taking well over 3 years. So if you're in some of these states, right, that's taking a long time for the lender to basically take possession of that property, especially in the wake of what's happening in the housing market now, which looks like, we're definitely in a recession. Definitely, I think, in my personal opinion, that the housing market has turned and it's going to get worse before it gets better, which means that property values are going to continue to go down. They're not going to go up. So from the lender's perspective, if you're in one of these states and you're saying, hey, I need you to work with me, because as you know, lender, it takes almost 1,600 days to take possession of a piece of property in Indiana. What's the housing market going to look like 2, 3, 4 years from now? It may compel the lender to come back to the negotiating table and work out a new deal with you instead of being cavalier, so to speak, and just saying, the hell with that, I'm not going to negotiate with you. I'm just going to take back the property. So you could potentially use this as a negotiation tool to help put yourself in a better position in loss mitigation to come up with new terms and conditions so you can stay in your home. Now, obviously, with the good, there is the bad. Sliding down to the other part of this chart, these are some states with the shortest average foreclosure time frame. Once again, from the time you default until the time the lender can take back the property. Now you're seeing all of these, basically the top 5, well within a year. They happen pretty quickly. I don't know why Texas is not on this list, because Texas moves pretty quickly. So these are states that if you reside in, you're pretty much at an advantageous, you're in a bad spot. Things ain't looking good for you, homie. So you're going to have to really be proactive in terms of opening up the dialogue with your lender, trying to work out some type of loss mitigation program or loan modification. Once again, that's something that I do specialize in. I do not spend a lot of time plugging myself. As you notice that, this is actually probably one of the first times since I've been doing these videos since January that I've even mentioned it. But it's becoming more and more of a hot topic in terms of people basically getting behind on their mortgages. A lot of those moratoriums that kept the lenders at bay during the health crisis has been lifted, and now these lenders are coming after people in a vengeance. So if you find yourself needing help in the area of loan modification, or if you've gotten behind and you want somebody to go to work for you, but not get paid until they deliver on their promise, then I'm somebody that you might want to consider as a viable option. The website is preventforeclosure.us, or you can call the toll-free company number. It's 844-598-3328. Or if you just have some general questions and you're still unsure of whether or not that is for you, you can email me directly, kevin@strongjacob.com. So I hope you found this video in a good place. It was a little bit longer than what I anticipated, but I think it was some really good practical information for some people who are currently dealing with foreclosure or potentially seeing themselves in that situation because of unexpected financial hardship. If that's the case and you're liking this type of content, please do me the honor once again. Hit that like button, subscribe, comment, and share, and get this video out, because there's a lot of people that don't know how to negotiate or don't know who to speak with if they fall behind their mortgage. The worst thing you can do is not do anything. Once again, this was Kevin Strong. I hope you enjoyed this video, and I'll see you guys in the next one.